So, Linda, walk us through your principle of how you deal with ESG in your investment view, and what's the return like? How's it been?
That's right. So Purview, for my whole life, I've a macro fund manager, I'm a global multi-asset fund manager, right? So in my past, I always look at risk-return spectrum, right? That as if that's my only objective. But I think more and more investors are looking for the third dimension of investing, which is impact. What is the environmental, social impact of my portfolio? So at Purview, what we're really trying to do is how can we continue to build a global multi-asset portfolio that satisfy your risk-return goals, yet at the same time have the lowest. We're zooming in on carbon emission. Carbon emission is the key cause of climate change, right? So it's a key cause for more intense weather-related events. So climate risk to us is really economic risk. It's business risk. It's humanity risk.
Right.
So what we do is we make global asset allocations by using much cleaner ETFs, using primarily ESG ETFs and impact ETFs.
Yeah, and I've got two feelings on this. So one, I think I've looked at the data on this, and they took, I think Morgan Stanley put out a research paper on this, and 80% of global asset managers and closer to 90% of millennials believe that companies should invest in global sustainability. It's poised to be a $2 trillion market in sort of one form or another. The ETF industry is so crowded. It's sort of like, what do we do next, right? Even at our firm, we're very careful about putting out products that stick to our DNA and don't try to compete with the passive Vanguard, low fee index products. And I think ESG came out of that. Like, what can we bring to the market that's new, that is, an added benefit to our portfolio? So if you look at the numbers, companies that are environmentally diversified, gender diversified, focus on global sustainability, 90% of the time tend to do as well or not sacrifice alpha as compared to companies that don't. So it all sounds pretty good. Mm-hmm. My other side of it, though, is I was looking at the indices yesterday, and I'm just not sure yet. So, for example, if you have names like say Facebook, BP, Exxon, Tesla, PG&E, those are top ESG ranked names in a lot of different ETFs. Right. P&G had the wildfires. Is that their fault or a one-off? Remains to be seen. But there were some checks and balances that are coming up that were concerning. Facebook privacy issues. Yes. BP, Exxon. There are a lot of women on the boards and in senior positions. I really like the gender diversity, but then we have oil spills that affect the environment. Even Tesla, the cars are great for the environment, but then the battery production has, a carbon emission
and also
issue.
It comes from the DRC.
Right.
So
I do agree with you. Some of the issuers, I noticed, are actually taking notice on what you just said. Mm-hmm. Last year, I remember when the Cambridge Analytica scandal first came out back in March last year. There's one ESG ETF issuers who actually kicked Facebook out. That was actually an Australian ETF issuer, Beta Shares.
Isn't this what's tough, though, about impact investing, ESG? There isn't just one index that measures it, right? And you can have a company that maybe has a lot of women on their board or doing great in terms of gender equality, but then their carbon footprint is terrible. So how do you guys make sense out of it?
In my opinion, there are two market leaders in how to define ESG and what companies to put it in. So MSCI certainly is a leader. Sustainalytics is a leader, right? But majority of the ESG ETFs right now are modeled after MSCI. So MSCI is actually in a unique position to influence what should be the standard of ESG, and they have done a tremendous job. Obviously, this is a journey, right?
Right. It's not going to be perfect. Right?
It's not going to be perfect.
It's not going to be perfect, and I imagine it will evolve over time. And one of the issues is just that the standardized data. Well, there is no standardized data. It comes out once a year, and as you said, MSCI has the closest, version of data that's reliable, I think. So as more providers get into this space and the assets grow, I think they had a 63% year-over-year growth from last year.
Wow,
so there's interest, but in the $3 trillion ETF span, it's a drop in the bucket. bucket. So I think, if we get there, it feels really good to invest in companies that are doing good in the world. So if they can get the index right, where we don't sort of question the merit of it, I think it's a good opportunity.
Well, I do think the financial community is looking more and more closely. I think about Bloomberg. We've created this gender equality index, and we've had a ton of financial firms, a lot of well-known big firms that have signed on, and so that everybody is kind of taking into account certain criteria so that the measurements are the same from company to company. So if that's an important issue for you, you can make a fair assessment.
But do you make the return?
I'm sorry.
Do you make the return that you want?
You do. Last year I look at, I at Purview we use about 10 to 12 on average ETFs to gain exposure to different asset classes, and I check every single one of them. They're either returns very, very close to it or slightly above it. And there's a reason for why ESG ETFs have such a closer tracking to a traditional index. That was by design. That was a choice by MSCI because they have a very tight sector control. So you can't really get performance that's so devastating compared to.
And they've done well too, because to your point, a lot of the ESG names in the Bloomberg Index, you have financials and tech, which the last decade has been phenomenal for. So they, the ESG names that are focused on those two sectors and overweighted there have kept up or done just as well. So.
Yeah.
Well, what are your client reaction? Like, what's your conversation in the market?
It's almost like the extreme. The extreme meaning to a younger generation or to people who tend to be on East and West Coast. When I talk about this idea of low carbon footprint, global multi-asset strategy, they were like excited. That's something. You mean I can actually contribute to climate change? I say, yes, you can do more than just cutting down your beef consumption and pick up your trash and
chai
plastic
lattes.
bags. The biggest impact you can make is you look at your regular investments portfolio or retirement funds and how much that is. You can detox that, and that would perhaps the biggest impact you can make on the climate change.